Hello and welcome to Steps to Investing on YouTube. Now today we have a really interesting show. We are talking about investment trusts and a very specific investment trust. Before we get to that though, just a quick reminder that an investment trust is what the jargon in the industry is a collective investment vehicle, which means it has a fund manager who is choosing shares in companies and investing them on your behalf. One of the other important aspects of an investment trust is that it has an independent board, a role of oversight, which we're going to come on and talk to. We're super privileged today to have a board member in the studio with us. Katie Thorpe is a CFO on Law Debenture. Katie, welcome to the show.
Thank you very much for having me.
Now, first of all, Law Debenture, what is it?
So, we are a UK equity income investment trust.
Okay, unpack that for us.
Unpack that. So what that means is that we invest predominantly in companies that are listed on the UK Stock Exchange, although there are 25% of the portfolio is invested abroad. And we're aiming to produce long-term growth for our investors over time, but also good dividend income and good growth in dividends.
Right, so let's just unpack that a little bit further. So in terms of growth, if I was to invest a capital sum, let's say £10,000, you're looking to grow that money for me.
Absolutely.
But at the same time, pay me, a bit like interest on an account, pay me some income.
Exactly.
Is that right?
Exactly.
Okay, and you're doing that by investing mainly in the UK. What kinds of companies in the UK are you looking at?
So our fund manager, James Henderson, who is assisted by Laura Foll, both of Janison Henderson Investments, they're looking for quality companies, but they tend to be what we call contrarian. So to explain what that means, they will look for things that are a little bit out of favour. So they won't necessarily be following what others in the market buy. They might buy something that for whatever reason people might be slightly less positive on, but they think underneath there's a really good business that's going to deliver well for shareholders going forward.
So they must be analysing those businesses in some detail. I imagine sort of seeing the people working in those businesses as well.
Yes, that's absolutely their approach. So they will go and visit individual management teams, and actually both of them would say that it's the management teams that they're really backing when they're thinking about the investments. Okay,
and let's talk then about the sort of slightly different nature of Law Debenture, because it's not just about investing in companies, you have your own company.
We do, so as well as having a traditional investment trust, we also have a professional services business. So we employ 120 people, mostly in London, but also in New York and Hong Kong, Dublin and Jersey, and we're selling professional services in those locations across the globe.
So your role as a CFO then is a bit of a hybrid, isn't it, sitting across both of those?
It is, and that makes it really, really interesting. So I'm responsible for putting information out to the market in terms of our overall performance, but I'm equally responsible for the day-to-day management of the company and the company's expenses, and for producing information to help the people that are running the separate piece of the business that we do to understand where their money's been made.
So that's the sort of day-to-day, if you like, but in terms then of this kind of non-executive type part of the role, overseeing the investment management, the bit the fund manager does, that's a sort of separate part of the role.
Yeah, absolutely. So that's us as a board. We meet 6 times a year. So we will have presentations from the investment manager who will talk us through his performance and explain to us what he's been doing. So what's been going well in the portfolio, what's perhaps been going not as well, and what he sees the opportunities as being going forwards. And then as a board, we would critically challenge that overall, not on individual stocks, that would be the manager's decision, but overall, do we think that we're following the mandate that we've told shareholders that we're following?
So overall then it's a sort of, it's an oversight role. You're sort of making sure that the objective is clear and that the manager's heading in the right direction?
That's absolutely right, yeah.
And in terms of the board meetings themselves, you say you meet 6 times a year. Did you say you are or you aren't getting involved in sort of individual stock decisions? Are you helping the manager with decisions, or are you suggesting companies that you might like to invest in?
Not really, no. So he would definitely talk to us about individual companies, but we wouldn't question on individual stocks, because as long as he's working within his mandate, that's really for him to take decisions on. But it is important that we're making sure that the overall strategy follows what the board has initially set.
So you're holding it to account in other words?
Absolutely, absolutely.
And One of the key things about that independent role, I suppose, is around fees. We haven't talked about fees, but the problem, of course, with fees is yes, you need to charge them, but the more that you charge, the harder your investment has got to work in order to cover those fees. How involved does the board get in deciding what the fees are?
Very involved. So it will be a negotiation between the manager and the board, and on the one hand we want to make sure that the manager has to make money for it to be interesting for them, and they also need to have a certain level of fees to be able to get the right research and to give the sort of quality of service that we would want. But on the flip side, we're trying to make sure that shareholders are being charged fairly for the performance that they're getting. So really it's balancing those interests, and that's something that you get in an investment trust that you don't get in a normal open-ended fund.
I want to pick up on something that has occurred to me as we've been talking. Is it possible then for a board just to say, this manager's not good enough, for any money, whatever the fees are you're paying them, we aren't happy, we want to move somewhere else? Does that happen?
Yeah, that absolutely does happen, and that's one of the critical roles of the board, is to make sure that if over time the manager for whatever reason isn't delivering what the board thinks shareholders want, that they absolutely can change, and again that's something quite unique about an investment trust structure.
Okay, now let's talk about boards themselves and the nature of boards. I think it's fair to say that lots of people would have a fairly stereotypical image of what a board is like. It tends to be male, tends to be older, a bit stuffy perhaps. Is that true, or is that changing?
Well, I like to think that I'm a bit of an embodiment of that change, but I think it's something that particularly the investment industry is battling with. There's been a lot of improvement in terms of getting women onto boards, in terms of the Hampton-Alexander Review, actually mandating boards and saying that they have to put women onto boards. But we've still only got 12 CEOs in the FTSE 350 that are women. So for me, particularly on the executive side, we need to work harder at that.
There's a bit of a way to go. Do boards see diversity as that through that single lens of male, female, or is there more to it than that?
I think because there's been a mandate there, I think boards have been quite focused on that gender inequality. But equally, I think it's a much broader question than that. So we need people that think differently. So that isn't just men versus women, that's having people from different backgrounds and bringing a wealth of different values and opinions into the boardroom.
So what sort of jobs do people do on a board? Do you have specific roles, and are you looking for people from specific industries?
So on an investment trust board, you would expect to see at least a couple of people who've got investment management experience. So they've either worked for an investment management business, or perhaps they were a fund manager themselves, because they will be very good at holding the fund manager to account and understanding the decisions that fund manager's making. Typically see someone who's an accountant like me, and you may see people who are lawyers, but really a good board should have a good diversity of background in terms of people bringing different skill sets and contributing different things in terms of overall governance and controls, as well as investment management experience.
Final question then. So if I was an investor looking at a potential investment trust, should I be looking at the composition of the board, and what should I be looking for if I am?
I think looking at the individual directors' CVs and just seeing, do they have those sorts of characteristics that I talked about. The other thing that people are quite focused on is overboarding. So that means basically if directors are taking on too many directorships, and therefore they might not have enough time to spend on individual investment trusts. Mm-hmm. So I think that's important to look out for as well.
Katie, thank you very much for that. It's been a fascinating insight into the mechanics of how an investment trust works. Thank you so much. And thank you very much for watching. Now, don't forget to head over to stepstoinvesting.com. You can find all of our content on there. And if you like what you've been seeing today, then of course, subscribe to the channel using the button below. Hope to see you again next time. For now, thank you very much. Goodbye.